fuck is up, boys? It's K-Doom Trades, back at it again with another YouTube video. In today's video, I'm going to be teaching you guys the basics of supply and demand and how I use that to confirm entries with my algorithm. Without further ado, let's get right into it. Alright, so starting out, what is supply and demand? Supply is an area where price had aggressive selling, and demand is an area where price had aggressive buying. Supply is selling, demand is buying. Now, I'll repeat myself one more time. It is only a valid supply and demand zone if it's an aggressive movement. For example, something like this would not be enough to be considered a valid demand zone. Or vice versa, something like this would have to be a stronger downside movement to be considered a supply. So I read this article from this hedge fund manager and it really stuck out to me. When taking a position, you need to focus on who's on the other side of that trade. Whenever you buy a position, there's always a seller on the other side of that position. This means there's always going to be someone that thinks the chart is going in the opposite direction. Now, this is a very important concept to understand when trading. Now, the reason this concept is very important to understand is think of it like this. If you're always buying from something, would you rather be buying from a good trader or a bad trader? When you're buying a position, you want to be buying off of someone that is not profitable. Now, if you can start thinking like this, it'll change your trading game. But this raises the question of, how do we know where the profitable traders are buying and selling? Now, the only way we can know if there's a large group of sellers or buyers in control if there's a sharp movement in the market. For example, right here, you can tell there's a large majority of buyers compared to sellers. And then on the flip side, down here, there was a majority of sellers over buyers. Now, this would be considered your area of demand. Here's an analogy to put it into perspective for you. Now, everybody knows Walmart. How do they make money? Now, they buy a large quantity of goods at a low price and sell to the bad buyers at a higher price. A bad buyer would just be a person who bought an item at a higher price than the seller bought it for. Here's a good example. They bought the price low and they sold the price higher. That's how profitable traders do it. All right, with that being said, let me show you guys how I draw these out. There's a bunch of different ways that people do it. Everybody has their preference, but here is my preference. So I draw it out from the high of the last candle before the jump. As you could see, this was the final candle before it. I put it at the highs and the lows of the candle body. This is just what works out best for me. There's a bunch of different ways to do it. At the end of the day, it's relatively the same thing. So with that being said, we have our supply and our demand zone. How do I use this to trade with the algorithm? As you can see from right here, price is coming up. We have a good supply zone here. Price comes down right into the demand zone. Right now, I'll be expecting a signal on this downtrend right here because it was a sharp move downwards and created an imbalance in the market. From there, I just wait for a signal for my algorithm to print, and I just watch the money roll in. Now, it's as simple as that. A little recap for the supply and demand zones. It's only a valid supply or demand zone if price has a sharp jump upwards or downwards after. That'll be it for this video. Thanks for stopping by and tuning in. Hope you guys learned something today. I'll catch you in the next video.